funding even if you have bad credit. So I'm working with the client who owns a store, and right now, she's having issues being able to pay to get more inventory. Right, she needs funding for that. Things happen in business. Things happen with paying taxes and other fees. So she's been trying to work through that while operating her business, but her business isn't growing the way she wants it to grow because right now she's tight on funds, so she cannot order more inventory. Another obstacle right now is that we can't use her personal credit because it's frozen because she has a credit repair expert or specialist working on her credit, right? So right now, doing just going straight to a bank, traditional financing, traditional zero interest business credit cards are not on the table because her credit profile isn't strong enough. So, what can we do? How can we help this young lady? So far, some of the things she's done, I'm going to give you some examples. You have MCAs. MCAs is a merchant cash advance. Now, there are pros and cons to an MCA. Great thing about an MCA is that as long as you have cash flow, you're doing 10, 20, 30, 40,000 a month. My client is doing between 20 and 60,000 a month at her store, right? So she has the cash flow. The great thing about an MCA, as long as you have the cash flow, they don't really care about your personal credit. They do want to see what the cash flow is like. They do want to see that you have kind of steady cash flow. They don't like to see huge swings. But the great thing is that as long as you have it, you meet their income and revenue criteria, you're good to go. They'll just approve you. And what merchant cash advances, what will happen is that some of them they'll lend anywhere from 80 to 100% of what your revenue is. Okay, and it's totally based on the actual business revenue. So that's a great thing. Now, something to know about MCAs, their fees are horrendous when you first start with them. Okay, they're going to be 20 to 30%, maybe 40%, maybe higher. All right, stupid high. The reason for that, though, is because it's a super high risk product that they're offering. If someone's lending you money solely based on the amount of money that you're bringing in, that's very risky because besides that, you don't have any other track record of keeping up with all of your bills, right? So it's highly possible to default. That's why their interest rates are so crazy. But here's the great part with an MCA, even though they start off with crazy high interest rates, as you start working with them more and more, those interest rates will come down. Okay. I've partnered with several different lenders that do offer MCAs. If your company is in a position where you have high revenue, but your personal credit is a little crazy right now, maybe it's frozen, maybe you don't want to use your personal credit at all, but you have this high cash flow in business, MCAs are a great way, and you can always just tap the link and book a consultation with me, and we can go through your numbers and see if that's going to be a viable option for you, right? Also, MCAs are great for inventory. They're also good for trucking, right? They're also good for if you are high income and you need to make a quick purchase for equipment in order to make some more money. Maybe you do landscaping or excavation, or you remove trees or something to that effect, and you need a piece of equipment to remove that tree, right? And you have high cash flow. MCAs is a great way. It's fast money, but the repayment terms are equally as fast. And just know you're going to have a higher interest rate, but that interest rate will go down as you build a relationship with that particular MCA company. MCAs, I would say, if we're talking about strategy wise, right? It's for the here and now. It's a very temporary thing. We're talking about 6 to 8 months, maybe a year, but most of them it'd be something crazy like 6 to 8 months, and they want daily or weekly payments. Keep all that in mind when we're talking about MCAs. That's why it's best when you have high revenue, 20,000 and above, and your business should be a year old. Okay, so it's not startup friendly. Okay. Now, another option when we have bad credit and we're trying to get inventory, right? So with bad credit, that means we're not eligible for any B locks. We're not eligible for any no doc products. We're not eligible for any zero interest lines of credit. Like, we are really trying to get it out the mud right now. Some inventory and some vendors will give you vendor credit, right? They'll give you your business vendor credit. What that means is that they'll basically front you the product, right? If you have a store, and let's say, like Walmart is fronted the product. The Charmin, Sony, PlayStation, everybody gives Walmart the product first and then say, here's an invoice. You have 30 to 45 days to pay us back. Or you have 10 days to pay us back, right? And what will happen is that doing it this way, you get your inventory and you're able to sell it. As you sell it, you will make the payments back to the vendor. Okay. Now, there are a lot of different vendors that offer this kind of financing. All right. And it's going to vary based on, of course, the type of product that you sell. Right. Whether you do a hardware store, you do general merch, you have a grocery store, or even if you have toys, right? Different vendors may offer this type of situation for you. Okay. There are also finance companies that will finance your inventory. So what I mean is that, let's say you are submitting a purchase order. You're submitting a purchase order for your inventory, but you need someone to actually front you the money, because not every vendor is going to offer you some kind of vendor credit. So what happens is that we have companies that I partner with and work with, where what they'll do is they'll actually give you the money directly so that you can buy the inventory. Once you buy the inventory, okay, and you're good, and then as you sell the inventory, you will pay the company the money back. All right. So there are a couple of things with that. Again, they're going to be looking at your revenue. If you earn six figures or more at your store or location, whether you're digital or physical. Also, the purchase order volume is important, right? Typically, they want to see higher volumes, right? 20,000, 30,000, 50,000, 100,000, okay? Or even more for it to be worth their while. And what will happen is that, depending on the company, some companies, I just came across a company doing some research yesterday. What I forgot what was it called. I think it was called Set Standard. I gotta look it back up, right? But they will actually partner with you on like a JV situation where you all are working in tandem, where they offer you the money. Well, they give you the money, you make your orders, and then they will collect their payments out of the sales that you're making, right? So it's a great way to get the funding that you need without having to come out of pocket up front. And it's a great way to get funding that you need without relying solely on your personal credit. So you see, there's a lot of options that you guys have. It's just that folks are not aware that these type of options actually exist. It's super noisy out here, right? So I'm letting you guys know, in all of these different type of options, I do work with lenders who have these type of financing options available if you're someone that deals with inventory, you have inventory, right? So go ahead, click the link, and you can book a call with me. We'll go through your business, your cash flow, your exact situation, and see what we can do to get you the funding that you need for inventory. Okay. Another type of financing, this is for a company. Let's say you already have inventory and you're trying to use your inventory, or you need money for another project. Let's say you need to buy a warehouse so you can get even more inventory, or you want to open up a second location. If you have enough inventory, let's say you have, now this is going to definitely be for more established businesses. Let's say you have $1 million worth of inventory. You can take advantage of what's called inventory lending. It's very similar to like secured lending, to where they're going to essentially put a lien against your inventory. You need to have about $1 million worth of inventory or more. They're going to put a lien against your inventory and then loan you the money. They really like this idea because, of course, if for some reason you fall short with making your payments, then they can just sell your inventory and recoup it, right? So this is a form of secured lending, even if you have bad credit. Another great thing about all of these options are mainly focused on the strength of your business. So this is for my established business owners. You already have your cash flow. You're already doing 20, 30, 40, 50,000 a month. You already have inventory, right? Or maybe you already have your vendor relationship set up, okay? And you're just looking for more financing options. These options will be perfect for you. If you need more help getting financing for your inventory, even with, you know, less than perfect credit, definitely click the link, set up an appointment with me, and we can go through your business, go through your needs, and determine what type of financing may be best, and then we can submit the application, right? Once you submit the application, there's a whole algorithm that will go through all the different financing options that are available to you, and then we can present you with the different offers, right? After that, you just decide yay or nay what works for you, and even negotiate some of the terms if we have some wiggle room to negotiate. Okay, so that's about 3 different ways you can finance your inventory even with bad credit. These are alternative lenders. They're not heavily reliant on your personal credit. They'll do a soft pull, right? So before we even start submitting applications or talking to the lenders or getting any offers, you're going to want to make sure that you remove all fraud alerts. You want to make sure you remove all the freezes off your credit report, because they will at least do a soft pull. They're going to do a soft pull. They're going to look at the cash flow of the business. They're going to look at the age of the business. They're going to make sure that the business is actually established, meaning that, you know, you're registered with the state, all that good stuff, right? So you need to at least have the basics taken care of. You have all that. Click the link in either the description of the channel, or you can click the link of the description of this live and set up a consultation. Okay, we'll go through all of your docs, your business structure, all that stuff. Make sure you're good to go, and then we can submit some applications for you and start getting some financing options for you that are not reliant on your personal credit. So even if you have bad credit, this is exactly what you need. All right, especially if you are in a time, your busy season is coming up. It's summertime. People are going to be outside. People are ready to spend money, right? All the farmer markets are starting to open back up, right? Those are going to go crazy. If you are a vendor at any state or local fairs, right, you need to get your inventory for that, right? For all of the outdoor events that are coming up, you want to get your inventory for that. This is the perfect time, even if your credit isn't as strong. We got inventory financing, we got MCAs, we have JV type of ventures, we have vendors that will give you a line of credit directly from themselves. You have some vendors that, some companies that will give you the money for your inventory, and then you pay them back. You pay them back as you sell the inventory, right? So that way you can be working in a partnership. Okay, so wanted to run that by everybody, because this is a client that I've been working with for the past couple of weeks, and these are a lot of the nuances and the options, you know, that I've discovered, and I wanted to share with you guys. So if you're in that position, you're looking to acquire more inventory for your business, click the link, set a consultation up, and I'll talk to you guys soon. As always, remember to like, subscribe, share this video, and leave a comment. Let me know if you have any other questions that I did not answer about this type of financing, and I'll talk to you guys soon. Peace.